Hello, everybody. If you want to respond during this webinar, the box underneath where it says send to, click all attendees. How's everyone doing? Topic of this seminar is how futures markets affect currency trading. I want to start off with saying that one advantage of following currencies in futures is because of regulations, people have to report their positions, and that's how you come up with statistics called the Commitment of Traders Report, which shows what the commercials are doing, which shows what the hedge funds, the large specs are doing, and what you and I are doing, the small specs. So even if you're trading cash FX, it can help you to pay attention to the futures, looking at open interest, looking at commitment of traders. Some people actually follow the volume on futures to get some type of indication. Yes, you can go upside down if you're over leveraged and leave a deficit in your account. Not sure if it can happen in retail FX. They probably have fail-safe, so they don't let you do that. But yes, it's possible. If you do that, you're over leveraged. You have too many positions on for the account size that you're trading, but it's possible. So what I'm saying is you can continue to trade the cash market, but you can pay attention to the futures markets to give you clues and messages as to what may happen in the cash market. If everyone understands that point, please give me a Y, since that's the topic of this seminar, is that we can pay attention to the IMM currencies. They're going to give us some information that you're not able to accumulate from the retail FX account because they don't have to open their books. They're not futures contracts, and therefore you don't know what anyone's doing at any particular time, and it's easier to track the volume coming into the IMM currency futures market. Okay, good. So we're going to talk about, besides that effect, which is significant, let's go to some of the outside markets. Also, what I like about, and be aware that if you're following currency futures, for example, the pairings are different. It's all against the US dollar second. For example, the yen. Where we have it paired around, paired the other way, and in the cash market, you could see that this would be a low in the yen. Here's a low in the yen, and here's the high in the yen. So a few of the pairs are inverted in cash compared to futures. USD CAD's the same way, USD Swiss. So something to be aware of. They're going to be moving in opposite directions compared to cash FX. Give me a Y if you get that. Also, here's some of the information you could follow. Open interest means something. The volume, some people get it on an intraday basis. So that's something to pay attention to. And then also pay attention to the basket. We talk about this at all of my webinars. We follow the Dixie, the dollar index, which is most heavily weighted in the euro. So when the dollar is heading down, it's normally the euro is strong, dollar heading up, euro is weak. but pay attention to the basket. I use the analogy that if you're not following the Dixie, it would be like somebody trading the Dow without following, trading IBM without following the Dow, or trading Apple without following the NASDAQ. Give me a Y if you get that too. And then we'll get to some of the correlation work I do between futures markets and the pairs. Okay? Let's move to that now. Wrong platform. All right, so here's USD CAD. And yesterday the dollar was strong, right? The stock market, it responds to dollar strength, usually pushes us up. Risk aversion, S&P's coming down, usually pushes it up. But compared to Swiss, which had a much stronger rally, Canada did not. Does anyone know why? Why was Canada's rally with a strong dollar and weak stock market muted yesterday? Any guesses? I've taught this many times. That's right, Donji. In fact, they not only congested, they rallied pretty good. So oil prices have a very strong influence on Canada. Oil came down and we got that nice pop. It's not always one for one, but it's worth paying attention to. So now we're going to find out if crude is a failing rally, if it fails up here at 96, although saber rattling is getting a little more intense in the Middle East. It's going to be one of two things. It's going to be a rally to new highs or a failing rally and then a washout. I still lean towards this being at least an A wave, and we get some type of failing rally here and then get one more sell-off. So the implications of that is Canada getting a little cheaper. I'm thinking that we have a chance to trade back under this 97 level. I'm thinking 96.70, 96.80 may be a decent place to probe it. That perhaps we still put in a higher low above this 96.30 level down here. Also, we have an inside week. That's a neutral week. So the most bullish thing you could do is take out this week's low sometime early next week and hold above this low and then take out this week's high to have an outside week. But major influence besides the S&Ps, and the S&Ps do have influence, but I think actually crude has a little bit more influence on the Canadian dollar. That's how that is affected, how the futures market and that particular commodity market affects Canada. My work in the pound, I really can't find any outside market that I can correlate it to. In the old days, when North Sea oil was big and we didn't have this type of sovereign debt crisis, it was considered more of a petrocurrency, the pound sterling, but no longer. So what I do is I compare it to the euro. Now, the euro does have a fairly significant and tight correlation with the S&Ps. When you look at the S&Ps, when they're going up, normally euro is going up. It's a risk on, risk off. So that was an inside week, which means that the range of this week or day or hour, this candle is inside of this previous candle, which gives it the potential that should it take out the low early in the week, and then close above the high of the week and start heading up would be a very bullish engulfing candle. Does that help? Soul Man? Yes? Okay. So as you can see, I was pointing out the S&P here, which has been much stronger than the euro. These are close to new all-time highs, whereas the euro is way off. But we have a little similarity in the pattern here on the daily. Look at this. This was right after QE. We got the first correction. Then I was recommending selling up here for a C wave correction back down to maybe 26, 25, something like that. And then you look at the S&P, and you have a very similar pattern. You have this after QE, failing rally. This was a little more stretched to the outside, upside, and now we're coming off. So paying attention to the S&Ps when you're trading euro is significant. That's how the futures market can affect currency in the euro. Give me a Y if you're with me. Then we move over to the yen, which had a pretty tight correlation that's starting to break down a bit. I correlate them to the Treasury market because of the carry trade. And I use the TLT as a proxy, or you could use U.S. bonds. Let's go to U.S. bonds. Because we're talking about futures markets. Or you could use an ETF as a proxy. Okay, this is your daily. Let's go. So as you can see in the bonds, and this is a weekly chart, that we've been heading up for quite a number of years, and while that's been going on, the yen has been heading down. Okay, so the yen actually bottomed last October, and we had a high in the bonds last October, and then the bonds made a new high without the yen making a new low in here, but it wasn't anything as dramatic as the bonds. So I look at the bonds as having an inverse relationship to the US dollar yen. So if we have rates going down and the bonds going up, it normally means a declining US dollar yen, which really means a strengthening yen because it's used to finance the purchase of treasuries. So that's something I pay attention to in the yen. If I'm a yen trader, I want to keep an eye on what the U.S. Treasury futures are doing, the 10-year note, 30-year bond, possibly the TLT for clues. So we do have a divergence here. Bonds made new highs back in here. It really wasn't, it was about 3 months ago. 2.5 months ago, and the yen put in it still so far a higher low. So this could be a big base developing here. If we had a big stock market sell-off, maybe we had one more push up in bonds for a third drive to a top, but this could also already have topped and on its way down, which makes you want to look for long opportunities in this pair. Everyone understand the correlation between the Treasury market and the US dollar yen, and can see how they usually trend together, and you could be getting signals that a bull market in bonds is usually a bull market in the yen and a bear market in US dollar yen. Give me a Y if you get it, or there's 23 of you in here. Feel free to give me a no and I'll clarify it. Okay, well then I'll just assume everyone gets that correlation. And let's move over to Aussie. Aussie normally has a pretty tight correlation to the S&Ps. It's usually the tightest. Has the most beta, which means the volatility is a little bit even more extreme than Euro as of late. It's been displaying some pretty good weakness. I guess the bulls could say this is A, B, C. But Aussie has a very strong correlation to what's happening in China and what's happening in the industrial metals. I pay attention to the copper futures and pay attention to the Chinese market, the FXI, the Shanghai Exchange, when I'm trading the Aussie. So taking a look at copper, you could see how the pattern is similar. Look at this. Look at this, although it's been a little deeper in Aussie. And if copper is going to rally one more time, and it looks like it's possible, you know, that we're going to make a move, this may just be some type of ABC, and we can make another move higher. Perhaps we get this push. I know a lot of people think there's a possibility of 108 in the Aussie. I lean more towards I'm looking for a sale, probably right around this low, around this 50-day moving average in here. 103.40, 103 to 103.40, I would give it an attempt. Because I still think there could be some more corrections to the downside. But as you could see, if you want to trade Aussie, you would pay attention to the copper market. And I know this isn't a domestic futures market, but you may also want to pay attention to the FXI, which is an ETF on the Shanghai. So that's how I I correlate the futures markets with what's happening in the Aussie. Okay, this is an ETF. So everyone understand the correlations in the future market influences that I pay attention to for Aussie. Okay. And we'll wrap it up with Swiss. And the Swiss is, I kind of correlate it to what's happening in the gold market. I know there's been intervention and so forth to, you know, put a floor on it so that, you know, even negative interest rates being charged in Switzerland. But if you line up the gold chart and the Swiss chart, there's plenty of similarities. And when Swiss is going up, gold is normally going down. And when Swiss is going down, US dollar Swiss going down, gold is usually going up. So just put this. Again, these correlations aren't 100%. But they work out pretty good, right? Here you see gold going up, right? Here you see US dollar Swiss going down, so pretty good comparison invertedly. Now, you know, gold looks like it's trying to top out and Swiss is trying to bottom. I think that there still could be a pretty good break in gold, shake out some weak hands, take us down to about 1650. Which to me would imply some more upside in Swiss based upon what I'm seeing in gold. And those are the correlations in futures markets that I pay attention to. I have a couple of minutes for questions. If you have any, go ahead and fire away. I appreciate your attention. Hope I opened your eyes to a few things that might help you in your currency trading, and that I've added value to your experience here on FX Street. Okay? Okay, Boyke. Any other questions? If you learned something today new, give me a Y. If you already knew it and it's clear to you now, give me a Y. How do we know which market for what? Okay. Well, I actually believe that you don't always know what leads, but you look for things. Say, for example, I thought gold was a leader, okay? And gold made a new high on Friday. So then I look at the Swiss, I go, gold made a new high, but the Swiss put in a higher low. So to me, the Swiss was demonstrating inherent strength. That was the message. So you get messages. What normally should happen isn't happening. What does that tell you? Yeah, they do. Yeah. So there's no pat answer. It's part of learning to be a market watcher and just getting the messages and seeing what normally happens isn't happening. How do I turn that information into a trade? Check them all. You're very welcome. Well, good hunting to everyone the rest of the week. I'll be back tomorrow. Thanks for your attention.